The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi everyone, it's Basil Chapman sitting in for Tommy O'Brien. Conflict here, we're scheduling, so I'm sitting in and it's my pleasure to be here. Well, let's go through a bunch of things. This is the market kickoff time, but I'm going to be sitting in. So we're looking here at 9:06 a.m. in the morning with the Dow Futures, and we've seen this day in and day out. The Dow Futures were attempting a rally last night, and then overnight they plunged down to 33,613. They're over 350 points higher right now at 33,962, minus 81. But this is the issue. This is what I'll talk about now, and I'll talk about it when I do my show at my 10 o'clock Tiger Technicians Hour. This is what we're looking at. You see this 200-period exponential moving average right here, the yellow line in the daily chart on the left? What we really need to see, and this is the fourth day after the low that was made, that was on right here. If you go to the Dow chart itself, this is the low that was made at 33,150 on the 24th of January. Let me just type that in, otherwise I'll have to keep looking it up. So it's 124.22. Now, the normal technique that I follow is that when I see a volatility index screaming into the high 20s, into the 30s, or even higher, and I'm very close to seeing some kind of reversal because of an overbought condition in the volatility index and a possible low in the market and a very oversold market condition, I want to see that V-shaped turnaround, and then I want to see the volatility index quickly start to move below one of the candles, certainly the candle that made the high. This case is the high that was made on the 24th at 38.94 with a low of 28.02. You want to see that dissipate really quickly and then start to go quite a lot lower, and especially on a weekly candle. So far, everything's holding up pretty high. The VIX index right now is at 30.70, up 21 cents. It was a little higher earlier this morning at 32.82, but the day is young. And now let me go back to the pattern that I was looking at. And what I really wanted to see was some kind of really strong rally to the upside on this fourth candle day after the low that was made on the 24th. We had a green candle the following day, a red candle the next day, went all the way to the pink 9-period exponential moving average, pulled back sharply. Remember, that was the Fed speak. Then yesterday, there was a rally attempt, went up over 500 points twice, and got repelled at 34,670s level at the pink 9-period exponential moving average. And then last night, as you can see here in the YM, which is coming back quite nicely so far, it's down just 59, you saw this big plunge. Now, what is the importance for me of the 200-period exponential moving average? This is the first time in a long time that not only did we pierce it, but we've gone below it. The low that was made December the 1st was above it. But we've been 5 candles so far below the 200-period moving averages. No, 6 candles, including the one before the 24th, the Friday candle a week ago. That makes this really important. Why? If there is to be a V-shaped recovery here, it is absolutely imperative we don't go sideways much longer. In fact, we start to break to new high ground, recovery high ground, obviously, and we go towards that 14-period, the black 14-period exponential moving average of 34,739, at least by Monday. So the day is young. We'll see what happens. A couple of things that we're looking at now. The weekly chart has made a peak. This is a sell mode no matter what happens today because it closed decisively under both the 9 and the 14-period moving averages. The MACD's weak, stochastics weak. On balance, volume says you could be close to some kind of a bounce. That's fine. That's good to know. And we've gone below the inside track propellant zone for so long. Now it's become a repellent zone at 34,500. This is the weekly chart. Monthly chart still has 2 sessions to go, but my suspicion is that in February, there'll be a very choppy February with a pretty good chance that the all-time high in the Dow that was at, right here, 36,952 made on the 5th of January, won't be taken out, but I think in March there's a good chance that we do. That's just the thinking at this particular moment. All right, now what we're looking at is the S&P. The S&P, same kind of choppiness, closed under the 200-period exponential moving average again yesterday. The S&P, let's just go to the continuous contract because I have that all the way in the monthly chart, went all the way down. Didn't take out yesterday's low, but it's now down 3. It was down, how much was it down? It was down to 42.66. I would say down over 50 points and coming back is pretty impressive. I think that's partly what you'd hear in Tommy's program right now, Market Kickoff. He'd be talking about the different 8:30 a.m. market updates. Let me just go here and see in the den. Oh, thank you, Ruby. We've got, let's see. She put in a bunch of US December core PCE 4.9% versus 4.8% expected. December U.S. inflation and consumer data. We also have U.S. employment cost index for the fourth quarter, 1.1% versus 1.2% estimate U.S. employment cost index. I'm sorry, I'm not able so nicely to put together the way Tommy does the fundamentals to the technicals, but these are this is what came out. And employment benefits, 0.9, and employment cost index 1.2 versus 1.3. So it's kind of high. Employment wages 1.5. These are all factors that we would put into the potpourri of different things. The assembly of all these different instruments, whether they're economic or technical. What I am looking at is, just to make it as simple as possible, the QQQ, the index 100. Oh, not only that, Tommy would be talking about Apple's earnings right across the board. They had fantastic earnings. Just I think one category was a little disappointing. Amazing results. And Apple, right now, I'll tell you in a moment, Apple is trading up 4.88 at 164.10. Also under the 9-period moving average, but the 200-period moving average is way below at 150. We're at 164.18 right now. That's a good sign. I do have a potential peak G in the weekly chart, and that monthly chart we need to look at closer. So let's just go back and we'll say the QQQ right now, the index 100 trading vehicle, the QQQ Invesco Trust Series is up 50 cents at 341.60, and the IWM, the Russell 2000, just gets estimated to going down $1.10 at 190.42.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Hi folks, we're back. Basil Chapman sitting in for Tommy O'Brien. This is the market kickoff hour, and we're looking at the NDX 100. Let me just do this again. This is the QQQ up 82 cents. We've got crude oil. We've got a caller on the line. I'll be there in a moment. The oil is up 158 at 88.20. We've had a huge move in natural gas. We've spoken about it yesterday, and now it's at 4.85. I'm going to go straight to our first caller. We've got John in Philly. John, how are you?
Basil, I'm doing very well. Thanks for taking the call and doing the show early. Always a good way to kick off the morning, get us all prepared. You and Steve Rhodes have got all the chart work we need.
Good.
Basil, I wanted to ask you specifically about the NASDAQ 100, not the Qs, the NASDAQ. I'd like to get to the cash index to see the Chapman wave labels. Basil, just by way of background, I called you the day after Labor Day holiday and asked you at that time about the potential for the NDX topping out potentially in a bigger way. Well, you and I talked. You were very helpful. The NASDAQ did top that week of September 6th and pulled back, but then it quickly bottomed October 4th, just 4 weeks later. And we've rallied up to make higher highs. And now the question I ask you is twofold. One, given that I see on Tiger TV, both the monthly and that weekly chart display a Chapman wave peak G. Yes. And I always recall your students long ago, Saratoga Bob. He used to be in the Tiger's Den regularly. He came up with a trading tool that he called the Chapman Wave Peak G sell signal. So we've got that. We've declined. So the two questions are, is this potentially a major top? And two, regardless of the answer of that, where you see support if, in fact, we decline under the lows of Monday?
Okay, those are fabulous questions because they are absolutely pertinent to where we are right now for 3 reasons. One is, on the daily basis, going from 16,764 on the 22nd of November at a peak E, pulling back, making that arch formation with a failure pattern. The double tops that I've been talking about for so long are so pertinent because within the context, let me just open this up a little bit. There we are. Within the context of the patterns that I like to look for, when there's a rollover and it takes out the previous left side low, you know, the pattern I call the dreaded H or the lowercase h pattern, you can sometimes make an even larger arch formation. But if that one takes out the left side low, what you have to look for is a measured move to the downside. We've already accomplished that. Not only that, the 200-period moving average of 14,930 was pierced significantly going into Monday's low, and all the bounces that we've had so far are suggesting that the low that was made on Monday has needed to do a bunch of retesting, not at the low, but at the level. You might remember this. I've got a pattern that I call the Chapman wave Roman candle. That's the one that gave us that great sell signal back in 2008, I believe it was, in the S&P monthly chart. What we're looking at here, sometimes it happens at a bottom. When it happens at a bottom, it's significant. We had the exact same candle on the 10th of January this year. And the rule of thumb is if it happens not at highs, but more towards a low that's been formed in the most recent iteration of price movement, what will happen is it's very positive, and that can go a little high. That's exactly what we saw going to that little peak A minus on the 12th of January at 16,017. So the rule of thumb should apply exactly the same to the Chapman wave Roman candle of the 24th of January. But instead, what we've done is we've gone below the high into the middle of the candle, didn't go to the left side low in the middle. If you close in the middle of the candle on a 120-minute bar of a daily chart, that's a significant thing. And we didn't do that. We've gone there just momentarily, and then there was a pop to the upside, and then yesterday was a really ugly red candle. So that makes this fourth day of the V-shaped pattern. So far, the stochastic is flat at 18%. It hasn't made a nice V-shaped recovery. The on-balance volume is really wiggling around here like an M. It could turn to a W. The MACD is still good. The histogram hasn't even improved much. So it's a really important moment. So I said there were three things. So number one is how we come out above this Chapman wave Roman candle of a high made on the 24th of 14,532. It's 532 points from where we closed yesterday. If there is a significant, by Monday or Tuesday, if there is a move up, and I have to tell you, everything I look at is saying, how on earth can't we get unless the tide has really turned to the downside, how come we can't even get a decent bounce that's sustained in the QQQs, the Index 100? I can't answer that right now other than to say we're ready for that bounce. We haven't got it yet. So that's why today and Monday are so critical. So I'm saying, based on the pattern that I'm looking at, now it's not just the high of Monday, the 14,532 level. It's actually the high of Wednesday, the Fed speak day, 14,646. At any point in the next 2 days, if there is a close above that, finally, we've got ourselves some kind of a rally that could at least try to test the 200-period moving average of 14,932. That should be a significant oversold condition to get us rallying for about 2-3 weeks. That's number one. Number two is, on the weekly chart, the confirmation that this was absolutely a peak G was at the starting point, the week of the 8th of October at 14,384 was significantly pierced this week, and that just cancels any alternative count that I had. So peak G it is. That's it. Yep, peak G is where you can get a pretty significant sell-off, but that's all it says. It doesn't tell you how far, okay? So I'm going to get to your third question, because I just say part 2A is that we've still got an alternate count peak G/C. The month is young. We've still got 2 full sessions to go. Anything can happen. That's number one. And number two is, if we have a bounce in March, even if we make a lower low, but at any point, if we can get back to 14,845, the green 9-period moving average in the monthly chart, that's going to say, wow, that's a save, because any significant pullback that doesn't go, say, beyond a high of 14,250, 14,300 says, uh-oh, you got a problem. So that's that. Now, the most important question is part 3, where should we hold? And that's really, we've gone below on a closing basis, the doji candle low of 13,843 with the move on Monday. I would just say that the next candle that I'd be looking at certainly in the bigger context, 12,900s has to be support. So looking out, 12,900s is my move that would say a break under it in the next 2-3 weeks will be very significant, very.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, we're back. This is Tommy O'Brien Jr.'s show, the Market Kickoff. I'm sitting in for him and scheduling an issue. And what I really have right now is a very interesting pattern that we're looking at, because the Dow is now up 4 points, 8 points, 1 point, just changing, but 8 points, 10 points. It should move a little bit more. And one of the reasons why this is fascinating, because look at this on the left side chart, the daily chart. Oh, first of all, I want to thank John. Thank you very much for calling, John. Hope I answered your question. Now, the next thing I wanted to show you is that look at the wicks to the downside from the 34,000, call it 39,000. 33,900 level. Keep going down, but keep popping back up again. At some point, this cluster formation has to see a break to the upside or the downside. The longer it stays sideways, the less impetus it can have to really push into the 34,700s. That's 700 points away from here. And the longer it goes sideways, the greater the magnet. Anytime it pulls back, every time it pops up, you're creating a resistance level. So this level in the 34,000, we got to watch this really closely. So here are a couple of things that we need to talk about. I want to go through each one of them. So we've got the Dow at this particular moment up 3 points, now it's down 5 points at 34,160. It is this. I spent a little time with John talking about this fourth candle after the low bar of Monday, the 24th of January, 33,150. This is the bar. Normally, I want to look at this. The December the 1st low at 34,022. The big green candle the day after. A red candle, just a sideways move the next day, and then a powerful fourth day. You can just go through all of these. Look at this. The low that was made back on the 20th of September, a little red candle after that big low of 33,613. Then a big green candle, but it doesn't really take out the left side high. It tries, it can't. And then a powerful move up, even though it gave back a chunk later on. And then started that really big move up to the 36,565 all-time high of the 8th of November. It's very different. So we're watching this very closely. It's really important. And one of the reasons why I've tightened stops, we had a stock that I really like. In my overview tomorrow that I'm doing for subscribers, my video that I'm doing, I'm going to take time going through a whole bunch of things. What we're looking at, it's almost like a webinar, but I'm getting questions that are coming in. It won't be a webinar. It's like that. It'll be pre-recorded. I'll post it and it'll be available. But I hope everything works out. We've got this huge snowstorm coming. I hope I don't lose power. But anyway, that's what I'm tending to do. And is that right? The Dow's down 133 points. I mean, what a market this is. I wanted to talk about the vicissitude of the market, the way it's acting at this particular point, the way the weekly charts, this is a peak E in the weekly chart. This is a sell mode I've got in the weekly chart, and the monthly chart is going to be so important. So the big question for John was, are the QQQs in the process in the monthly chart of making a much more significant high at the 408.71, November the 22nd, all-time high, peak D in the daily, peak G, we were talking about that in the weekly, and a potential peak G, but /C in the monthly. All I can say is on the QQQ, that's completely negated if there is, even doesn't have to be a close, just a price move below 316, the low of May of this year. If there is a price movement below that, this could turn out to be a way more significant move in the NDX 100, and obviously that pertains to just about everything else, and that's really what I wanted to talk about. And I wanted to spend some time just going through possibilities, where we are, why we've lightened up so much. And Martin, thank you very much. You sent a very well thought out email to me. Yes, I too am upset. I've been talking about this for months, that the QQQ, the NDX 100, is making the kind of top that I thought would be a more, not just a short term, but a more intermediate term top. We did not go short, and the obvious thing would be to say the IWM Russell 2000 still acting very poorly right now, which is down 86 cents at 190.53 at a new, is an unrecovery low after the all-time high that was made back on the 8th of November. It went to 244.46. That was a peak F in the daily, peak D in the weekly, and a D in the monthly chart. So the question, you made a statement, and with a question saying, because you saw that we were going down sharply. Why didn't you choose the weakest? Yes, you are short the Dow, but why didn't you choose the weakest index to go short? Because the weakest index acts the poorest usually in a bear phase, and in a bull phase, the strongest lead. So the answer is, it's a complex answer in that the positions that we had that had fantastic gains, and we did take profits on the way up and then on the way down, and we got some core positions left. Those instruments were in such a position in the structure of the economy that I thought at any point, if there was going to be a decent rally, they should participate. The fact that over this past week they've been breaking down is really significant, because it says in the next move, you're going to have to look for some new configurations, some new sectors, and that's what I'll be talking about in the webinar. What are we looking at? You know what we saw today? Natural gas. We spoke about it yesterday, had a question about it, and I discussed it, and it was somewhere in the I think it was the Ford. Oh, no, it was the UNG. The UNG was in the, there it is. It was in the somewhere in the 1446 area, I think. That's the United States National Gas Fund. And then we discussed it. I said, I don't see anything yet. I don't like this sharp move up and the very sharp move down from a peak C. It says that, I believe this, I'm correct in repeating what I said yesterday, because that's normally what I would do. I said if it can go into the 1485 or 1510 or 1515 area, that would be a really good sign, and say, wow, if that happened, we could get to that trend line resistance, and maybe even think of that a leg D above that peak C that was made on the 12th at 16.19. But if there was a move down below I think I said 1420, that would be a big negative. Well, overnight, we started to see some rallying, and whoopoo, it goes up. Today it's up 8% at 16.49, up $1.27. It's at 16.74. The pattern I showed subscribers this morning, we missed going long, but the pattern that I showed this morning was that that this trend line right here was significant, and that there was a move above it. We would quickly go above that 16.19 area, and yep, we went to 16.74. So natural gas is working right now. It could pull back. It could, natural gas has this way of bouncing, and they just really sharp pullbacks. But I do think that this is an important moment, both historically, that's both in winter and summer position. This is a winter time.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, we're back. Basil Chapman sitting for Tommy O'Brien. This is the Market Kickoff Hour, but obviously I'm not doing his show. No one can do it as well as he does when he combines all these different aspects. And I would love to be able to talk about Apple. I'm sure you would have elucidated a lot of information about Apple. All I can say is that Apple is in a sell mode in the daily. It is really close to a sell mode. It's in a sell signal in the weekly, but hasn't yet given the signal for a sell mode. Have to wait for today at 4 o'clock. And the monthly chart is in a G/C, very much like the G/C in the Chapman Wave methodology in the QQQ. So what I am looking at here, what I normally would do is I'd grab it. So I was asked if I could go through a bunch of things. I'll do that also in my show coming up straight after this, the Tiger Technicians Hour, for the Chapman Wave falling axe formation. I'll talk about that a little bit more in my show with Apple. I'll go through there are many of you that have those really big caps like the Apples, Amazon, etc. And I'll go through it. Maybe I can still do it now, but I needed to do something because I haven't finished what I'm looking at here. Look, gold has gone in that rectangle formation that I drew. It's gone from a peak E in the daily to a sell mode. Yesterday was a sell signal, upgraded at the close to a sell mode in the daily. And it pulled back to today's low of 1780 on the continuous contract. Just the other day, I don't like to actually type the numbers in here because this is the continuous contract and it gets smoothed out. The prices change, the pattern, nothing changes other than the price at 1856.5. Here we are at 1780. That's a pretty big. It's not that it's a big decline. And I have to congratulate Larry. I had heard him earlier in the week talking about sell signal on gold. But what I am looking at here is in the weekly chart, it's just back into this major. Remember, I like to draw a rectangle within all the patterns that are forming. Where is the crux? Where is the bulk of the trading? And the bulk of the trading for gold has been between 1840 and let's just say 1780. And let's make it 1770. That's the bulk of the trading. It's just been stuck in a range, and I've been discussing this range for a very long time. I don't see it breaking out. I see it later. I think maybe February or maybe even March is where gold really picks up steam, but I don't see it yet. Look at silver. Silver's been our little what do you call those little fish that pilot fish or something, the ones that just hang around the shark, they're right underneath it. Anyway, silver's right there. Also gave back a huge amount, down 24, 22, 43. I didn't say how much gold was down. Gold was down today. It was down sharply yesterday. Today, it's down another 8. A day's young with gold, you never know. So silver's the same thing. But wait a minute. The dollar index, Basil's dollar index is giving a doji candle leg C at a spectacular breakout of the same rectangle formation where it looks like a propeller shaft. That's the midpoint, goes below, goes above, goes on. And it just keeps doing that. Leg C in the week and the daily charts, it still go to a leg D next week, higher high, and a leg D in the yesterday I was having trouble because of all the activity, but now I can show you the chart. This beautiful bowl formation in the dollar cannot be ignored. This is the same bowl formation that we saw back in the year 2000 when the XAU had made its low and the gold miners, gold and silver index, it made this beautiful cup formation, and then it turned into a flat bowl formation. And when it broke out in 2000, it just started a whopper of a move. So what we're looking at here is at resistance, and the weekly chart technically is not all that great because the stochastic is still way down at 64%, but the weekly chart always takes the longest to repair damage, because look at the monthly chart, stochastic at 88%, fabulous, MACD's good, leg C, it's gone above this big red candle that I said that was our benchmark on the left. 97.80, I think, was the level we wanted to see. Today we've gone to 97.44. We're close to it. And then each candle becomes the next resistance levels. So far, that's really good action. EUR, USD. Let's see, we're looking at a breakdown in the weekly chart, the dreaded H pattern and a peak C minus. Whew, that's not good. And that's really positive for, and yes, your rectangle formation. We're out of the bulk of trading scenario of 1.123-ish and 1.137-ish. So this is really important. We're at the lower end. And here we are. Look, propeller shaft up to 1.148 in the euro, then down to the low today of 1.112. And there could be a little bit of a bounce, but it might be later next week that it tries to get back into this range here of 1.129. All right, and we've got the USD Jpy. That's rallying. It's not. It goes usually with the same direction as the dollar, but not in the same proportion. Just the direction. And here it's broken out of the falling axe. What was I looking at? Oh, Apple. I'll do this in my show. No, I'll do it right now because I'll forget. Apple. You see this falling axe formation? This trend line resistance. Apple needs to break and then close and start trading at 167 or higher. My thinking here is that between Apple, I'll do more of this in my show, Amazon, this has been a breakdown, and this is a breakdown of significance. Amazon, lousy today, down 18 at 27.74, all-time high 37.73. How many times have I been talking about these double tops? We saw that even in the NQ, NDX, 3773.08 on the week of the 16th of July, 2021. 3762.17 was the high on the 19th of November. Double top. Look, the technicals were all weak, and look at the result. 1-to-1 to the downside, gets even expanded from the cup formation. And I must say, I've got a peak E now on the monthly chart, regardless of what happens. That just says the monthly chart is suggesting Amazon has, I can call this an expanding wedge formation. I could go to the top here. I didn't want to. I prefer to think of it as a rectangle with an aberrational break to the upside. Now we've got, is this an aberrational break to the downside? No, not really. So now what we're looking at is, we've got that. We've got Google. Now I want to do these during my show. There's a lot more to do right now. So Google is acting, it's up. Big deal, 5 points, 3 points. It's made a sell mode in the daily, sell mode in the weekly, maybe even a sell signal very soon. So to answer the question that John asked from Philly about the QQQs, I think that this is a lot more serious in the sense that rallies should fail and we should make lower highs and lower lows. But I think a real big chunk of the down move has been accomplished on the older, the NASDAQ stocks that have already had a huge move to the downside. Now we're seeing some catch up in the biggies. And the biggies, of course, these are the biggies. Netflix as well. Netflix, look at that monthly chart. Monthly chart is now, regardless of what happens, Netflix monthly chart is in a sell mode. So I think I'll answer that. TLT, I want to spend a moment here on TLT. Why? Because the TLT is the Lehman 20-year Treasury bond fund. It's down 39 cents at 142.68. The reason why I've said that it's different this time, and I'm prepared to have people say, oh, yeah, ha, 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 is because it is different this time. This is one of the few times I can remember where when the volatility of really fabulous stocks says, volatility meaning going down in the market, doesn't see money flow out of those stocks, the equities, into the so-called safety of bonds. There's something different here. I think rates are going high, and there's nothing to do about that yet.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, it's Basil Chapman sitting in for Tommy O'Brien, Market Kickoff Hour. Of course, I couldn't do anything like this show, but I did the best I could. We're looking at in the 1 minute E-mini chart. It made this high, this recovery high at about 9:30. At about 43, 32-ish or so. Peak F in the 1 minute chart, plunged, making it one dreaded H. Here's a second dreaded H. This is really important. It needs to bounce very quickly. Made a peak D in the 10 minute chart, back at 22.20 last night, 10.20, and then went from 43.56.25 at peak D all the way. Look at these dreaded H's all the way down to the low that was made at 22.66.25, around just about 8 o'clock, and then ran up to where the 200 period. Look how important the 200 period moving average has been for resistance. Boom, boom, boom. It bounces, it hits it, gets repelled every time. Even got repelled in this last big spike to the upside. Okay, let's just do this as I wrap up. Don't forget, great programming here today. Steve did his show earlier, 8 to 9 a.m., and it'll be repeated in his time slot. So you've got my show coming up right now, the Tiger Technicians Hour. Then we've got Larry Pesavento, of course. We've got Thinkorswim, Kevin Hincks. We've got Steve Rhodes repeated, the hour will be repeated. Then you've got Dave White and Tom O'Brien. I'm not sure Tom's doing his show today, but we've got the Tom O'Brien show wrapping it up tonight at 4 o'clock. So we're down 290. This is not the action you wanted to see on the fourth day after the V-shaped turnaround on Monday. We're going to be talking about this. We're going to be talking about crude oil being a little bit toppy, but it's still acting very well. It's up 2 at 88.68. That's not really toppy, is it? But in the notation, it's getting a little toppy. And natural gas had a big spike to the upside, pulling back right now. That's okay. It's telling us that, yes, it's in play, and that's important. So we're going to wrap it up right now. We're going to be going to the news, and then we'll do my show, The Tiger Conditions Hour. Now, Saturday morning, I'll be taping my overview video, and I'm going to be doing a lot, looking out what's ahead for 2022, this first couple of months, what we're looking at for most of 22, what sectors should work, why, even with Nucor acting so well, why is the steel that active ETF down so much? Just a lot that we're going to discuss, and we'll talk about that in my show coming up. Have a wonderful weekend, and I hope you can stay for the rest of the day for the shows.